I have, okay, now it's recording. We're welcoming Patrick Rooney, who's had a long career with very advanced technical level of product management, but he's really into all of the detailed technology of the products he's worked for, and including until originally I got in contact with Patrick, he was with Trading Technologies, which has a very high end, and he was, I believe, product manager for their product, TT product, which is a multi-broker futures trading platform that is very high end, very widely used in the industry. He was also, I believe, a CTA or with a CTA that traded $1 billion worth of equity or of holdings, and he's been a CME trader, I believe, also. Please correct me if any of those are wrong. And so right now, though, he's right in the forefront of crypto. He's now with Venus Labs, and we hope he'll tell us a little bit about it. But I think what we can do is ask any question on any aspect. Patrick has written a blog. He writes blogs that cover all aspects of crypto. And let me just post here some of the things that I sent to Patrick that I think everyone meeting that are my suggestions for something he could address. Let me just see if that goes. Control V, can I do that? I don't know. Paste. Okay, so those are some topics that I'm suggesting. I would suggest that other people post some topics you'd like discussed. What I mentioned there is, I think a lot of us would really like to know, how do we get into crypto? Obviously ETF options are a very lazy man's way to get into crypto. Another way is futures options on crypto, which is very legitimate now through CME. Or do we really, if we want to get into crypto trading, do we have to, DeFi, exactly right. But what is the difference between Binance? Can we even access these exchanges we hear about so widely? Many of them apparently not, or we only get watered down US versions of them. Binance, Deribit, are there option strategies, automated trading with crypto bots? We have, it's just, I really like this. We're getting suggestions here from people already. So please keep posting more. Absolutely. Automated trading with crypto bots. We see 1 million of those on YouTube. Do they have any validity whatsoever? I have my doubts. And if not, what would be a valid way to do some automated trading with crypto bots? Anyway, those are a few areas we might start with, and please continue to post some areas that you would like Patrick to cover, and I'll just hand over to Patrick.
Yeah, hi everybody. Thank you very much, Don, for that warm opening. Don and I have gone back and forth for a year and a half now about getting me having some time to talk, and wanted to actually get out there and talk finally. So I'll give you a little background on myself. My name is Patrick Rooney. I've been in the capital markets and futures space for a long time. I started on the floor of the Chicago Mercantile Exchange back in 1991, running paper in the meets. If you guys are familiar with the CME floor, it's kind of a crazy space. But yeah, that's where I started, was literally running paper in the meat pits to lean hogs and pork bellies, that other thing. Emigrated over to the Eurodollar pit, which is probably was the biggest, loudest, most raucous, and biggest money moving futures pit in the world. I'll give you a story about that. Like, I could tell you a lot of stories about that if you want to ask questions about, but that pit was so crowded that literally during a number, like an unemployment number, we were so packed in there, I could lift my feet up off the ground and not fall, both feet. I would just float because you're so packed in shoulder to shoulder with everyone else in that pit. So it was those are crazy times. From there, I went upstairs and traded for a CTA for about 5 years. We hedged about $1.5 billion for a pension fund and a few other CTAs that allocated money to us. We traded futures and options on currencies, on equity indices, and fixed income products, was basically treasury bond futures and options. From there, went to Zach Semester Research, and that was kind of interesting because Logan, I really enjoyed the presentation. I saw the last 50 minutes or so, and I was a quantitative product manager at Zach Semester Research for about 5 years, so I'm very familiar with the space. That's some cool stuff you had going there, so I appreciated seeing that. But then from Zach's, I went to Trading Technologies, got recruited out of there to be a business analyst, help them with their X-Trader platform, which was the leading derivatives trading platform in the world. That's what all the investment banks use: Goldman Sachs, Bank of America, JPM, all the talking heads from the hedge funds of the CNBC, and I'll give it a shows. If they're talking features, they most probably used our platform as well. Then I was a product manager that kind of transitioned it from a locally installed software package to a software as a service, or as a browser-based platform. We're kind of the first leading capital markets firm to actually go into the web and go into browser-based solutions and using the cloud. So that was an interesting transition. And then from there, after I built the web-based product, I kind of moved into the marketing side of it because they needed me to now move it, sell it. Then the company was sold back in 2022, and I kind of cashed in my shares and wanted to move into crypto because it was kind of fascinating. And one of the reasons I found it fascinating was we were primarily doing futures software or futures platform. But around 2016, 2017, the talk started going about of that crypto's coming on, and we knew we had to start getting into there. And I started looking at it from a product manager's perspective and from a trader's perspective, and said, yeah, it's kind of interesting. But really what kind of most enchanted me about it wasn't really cryptocurrency as a new currency. It was blockchain and distributed ledger technologies that I kind of got fascinated by. I saw the efficiencies in there very quickly, how they could replace and improve and greatly help the future space and really all the capital markets for a lot of reasons, from settlement, from lending, from a lot of bases, where actually having a distributed ledger would be a much more way to go about the way the capital markets are actually managed in the back office now. I saw digital ledger technology, basically blockchain stuff, as an easy way to replace the middle office and even the back office to a great extent in a lot of the trading shops. So that's why I was kind of piqued by it. And in 2017, CME, of course, added Bitcoin futures. So we added that to our platform. Prior to that, we had added Coinbase. We also had BitMEX and Deribit and another exchange called CoinFlex. So I kind of got my feet into the water of crypto back in 2017. And come around 2022, I decided to go in there full time. And that's where I'm at. And I've made, like Don mentioned, I'm with Venus Labs right now. Venus Labs, we are a DAO, a decentralized autonomous organization that essentially we have a DApp, which is an application that runs on DeFi. It's decentralized application that allows for crypto borrow and lending. So people can go in and borrow crypto and lend crypto through us, and it's seamless and it's clean. There's no human intervention whatsoever. There's no middleman, which allows us to offer premium rates than what you'll find in the general marketplace. So that's kind of where I'm at and where I've gotten to. And I can go across some of the questions that have, Don and I talked about early on, like intro to crypto derivative trading. Intro to crypto derivative trading. I love crypto. I don't really do much of it right now because I kind of can't, just because of some compliance issues that I'm tied into. So I can't really do it. I have previously. I like it a great deal, and there are a lot of great places to do that. At the CME is, I haven't looked at liquidity recently, but I did see, at least the features I saw, that features volume at CME has been through the roof. They've been hitting records in there, so that's a good thing. I haven't looked at the options. I like to trade a lot of options, but I did see a talk by a buddy of mine, Jim Uro, who was a commentator at CME, who was talking about some micro Bitcoin options today as strategies to get in there. I think it is a great place to get in there. I think it's a great way to trade this stuff because buying options, your risk is limited. You don't have to worry too much about if it's going to get blown out. You might lose your initial premium, but you're not really going to get a margin call or something like that, which is kind of nice. So that is definitely one way I would go about trading crypto derivatives at this point, and CME is a great place for it. But then on top of CME, if you're really looking for high-end price, the best price you could possibly get, there are places like a shop that I worked for a while when I left Turn Technologies called Paradigm. That's kind of an aggregator. They're an OTC aggregator, which means what they really have is a lot of market makers who go on and actually quote markets for them and make markets, and then people settle the trades by OTC with different exchanges. They settle at Deribit, but most of it goes to Deribit there, I think. And they also go to Bybit, I think, and they go to CME and maybe one or two other exchanges. I'm not really sure more. So yeah, those are kind of the angles I would go at. But I would assume some of you here, at least our CME, do have futures accounts. That's the way I would try to go is at CME, and I would actually go with buying and selling, just buying options really, and selling options. It's kind of a safe way to go about it. Strategy wise, personally, strategies I like is, when you have the big dip days, I like to do risk reversals. I like to sell puts and write calls against that. But that's just me. It's not really advice. It's just kind of the way I like to do it, the way I've kind of financed myself over the years in different products. I did a lot of that in that E-mini and stuff like that in different places. So been around. Other crypto options, yeah, there are the ETFs out there, kind of ETFs and ETNs. There's BITO, and what else is there? There's ETHE, which is for Ethereum, kind of that is Grayscale Ethereum Trust, and you've got GBTC, which is had all sorts of issues because they're tied to some owners who are kind of had some issues with Greylock, but they should bounce back in that. And it's also trades at a great discount to the spot market right now to a certain extent. So that's interesting. Other ways you can get into it. So essentially, it's like you can buy it at TD Ameritrade. And I think in the feature space, you can get features at TD Ameritrade as well as several other places. I can't really tell you where I've been out of the feature space for a year now, so I can't get into too much detail on where to go and get them. But that's some of the stuff to get into. Brokers are applicable. Like I said, I don't really know who all are the leading brokers out there right now for the futures and options on crypto, but they're definitely out there. You could probably find that at CME.com. They actually would have a place where they would have brokers, but I deal primarily in spot. And most of the spot I deal with right now, like the borrow lending I deal with right now, is actually on BNB chain, which is a lot of people say it's kind of Binance, but it's not really Binance. It's kind of a separate little beast from Binance. And I know there's been some questions about Binance. I think you threw some out there. Binance, you can't really get to Binance here in the States. It's blocked off because reason being because they don't do KYC is really the big reason why. So they don't want to get into here because they don't want to do KYC. They don't want to do AML. So that creates some problems where you can't really get to it here in the States. It's the IP will be blocked. You can't really get to it. But BNB chain, you can get to through dApps like mine and through other dApps out there. You can get to BNB chain without too much problem at all, because it's not really part of Binance. It's a whole separate standalone beast. And I'll explain what that is a little bit. BNB
Can
chain
I
is
ask,
just a blockchain.
how would you get to those if you wanted to?
Well, you can get to them. Really, it's a question of how you're going to trade it. I'll give an example. If you're in the DeFi space, and let's say you want to do a swap or something like that, or if you want to do a loan, like through who I work for, who is Venus Labs, you can get through just venuslabs.io. Gets to the app, and then essentially, let's say here's kind of why the crypto lending space is kind of popular and why people kind of like it. Let's say you've got a whole bunch of Bitcoin, or you got a whole bunch of BNB, or you got a whole bunch of Ethereum. You don't want to sell it because you want to capture the upside still, but you can actually put it down as collateral, or you can supply it into the marketplace and get paid an interest rate on it, and get paid a pretty good interest rate on it. And let's say, kind of the base story is let's say you want to put a down payment on a house, and you've got $100,000 in the Bitcoin, but you don't want to sell that Bitcoin because you're going to take a capital gains hit, and you want to capture the upside still. So what you do is you put it into something like a Venus Labs, and let's say you'll be given credit for 70% or 80% of it. So then you can cash out, say $70,000 or $80,000, whatever you want to do, and use that for your down payment. You can cash that out into a stable coin like Tether, and you could then cash that into actual US dollars if you want, and use that for your down payments. That's one of the reasons why lending protocols like Venus Labs kind of have a space. But when you do that,
So basically, you'd be
on the chain.
lending in that case. You'd be lending against that collateral.
Yes, exactly. You would essentially lend your stuff out, allow people to actually have access to that, and then you get paid an interest rate for that. But then, of course, if it continues to rally, you still have access to it. So it's not that you're going to miss out on the rally. Make sense?
Sure. And can you then trade that capital or the money that you finance?
Well, yeah, the money that you financed, you can. So let's say you put $100,000 in, and let's say you want to play safe on it. You want to say, I'm only going to use 50% collateral on that. Well, first off, you can just supply it, which I mean, personally, I don't take loans at all. I don't, but I do supply cryptocurrency there, and I get paid interest on that. Because that's just the way it works.
See.
So without even taking a loan, without even putting down collateral like that. But what some people do, yes, is they will collateralize it, and they'll put down their Bitcoin, and they'll collateralize it. Let's say you put down $100,000 worth of Bitcoin, and the collateral factor on Bitcoin, I think, is like 80% right now, which means technically you could take out $80,000. But the problem is, if you do that and Bitcoin continues to rally, you're going to get hit on that a little bit. So you're going to get called on it. And what people most likely do is they'll take out, say, 40 or 50% of it. So I'll take $40,000 or $50,000, and I might take that $40 or $50,000, and I can put that back into Bitcoin. And I could buy more Bitcoin, or I could buy more of Cake, or I could buy more of Ethereum, or I could buy more of another cryptocurrency. And that's kind of the trading aspect of borrow lend protocols like Pine. So you just as simple as that, you put in the cryptocurrency that you already hold, and you can take a loan against that, and you can use that loan to go and buy other cryptocurrencies. Or you can use it to buy a bike, you can use it to buy a house, you can use it to buy whatever you want.
And will they accept like small investors or traders?
Yes, yeah. There's people that put in $50, $100.
Oh, really?
You don't have. Yeah, we're pushing it in institutions, and we do have some institutions that put in whales that put in millions of dollars at a time. But you can do it with very, very little money. It's easy to get to. It's just the website itself is venus.io.
Venus.io.
Yeah, venus.io takes you right there, and you'll see it's called Universal Money Markets, because effectively what we are is, we don't like to say we're a bank, but it's basically like banking. So it's the same thing, but there's no middleman involved. There's no physical bank, obviously, and there's no bank officer you got to go deal with to get a loan. If you want a loan, you can get a loan very, very quickly, very, very easily, without any type of hemming and hawing or negotiations. It's all very, it's almost like CarMax.
So a lot of people, a lot of people probably have large, reasonable holdings of cash or of underlying Bitcoin, for instance, and other similar. And so this would be a better way, rather than just letting it sit on their mantelpiece on their house, in their house.
Yeah. That's part of it. Because a lot of people, they do have substantial holdings of cryptocurrency, and it's just sitting there. It's sitting there in cold storage, or it's sitting there in hot storage, even which I wouldn't necessarily do. I don't personally hold any cryptocurrency at exchanges. I take it out from the cold storage, but you could also put it into a borrow lend protocol like a Venus and get an interest rate on it. And
super.
So it works pretty easy. Yeah,
super.
It's a nice way to go about it. Yeah, and that's kind of where I'm at. And some of the other questions, there was one of the questions that kind of got put in the early seed: Binance versus Deribit versus CME, et cetera. Yeah, there's kind of a lot of ways to look at one. If you're in the US, you can't get to Binance anyway. But Deribit, I don't think you can get to Deribit either, to be honest, perfectly honest with you. So that kind of blacks out. So CME really is, they've got the stranglehold on it.
Some people are posting workarounds with VPNs and so forth.
Yeah. There is Binance US. Binance US. I actually have an account in Binance US, and I've traded with Binance US a good deal as well too. So you can certainly go to Binance US, and you can get to effectively a lot of. One of the nice things about Binance US is you can get to some coins that you're not going to be able to find at Coinbase necessarily, or at Kraken. So you can get to some stuff that's not really there. And Binance US technically is not Binance. It's a whole separate standalone entity that's not really. It's not like it's an affiliate, so it's a whole separate little beast. And it's a nice exchange. I've done some execution there in the past. So I've never had any issues with it. So that's kind of where I'm at. That's kind of what I've been up to. And again, I'm happy with any questions, anything that covers any type of space. If anyone wants to get into anything, I'm happy to be here for you. Talk about futures, talk about crypto, talk about where we want to go. So
Just to get back a second to X-Trader.
Yeah.
Is it, you mentioned it's used by the largest institutions
yes.
very widely. Is it viable for an individual person? Or if an individual person wants to get into trading, not necessarily crypto, but even more generally of options and the like, is that viable, X-Trader or approach? Or?
Yeah, it's available on the retail level, but it's not really supported to. No, I wouldn't say supported is the right word, but
Targeted.
TT really, not targeted. No, we talked about that when I was still there, like 7-8 years ago, really making a push into retail, but we decided to concentrate and focus all on institutional. So pricing wise, it's expensive. You know, it prices out of the retail, but you certainly can't get to it. It has more tools and more functionality than you'll find in any other type of retail platform. Like, what type of tools and functionality you're really looking for. If you're just simply buying and selling options and or features and stuff like that, you probably don't need a lot of the technology you're paying that type of trading now. Don't get me wrong, I love TT. I still have a lot of great friends there. I love the company. And you might still be able to get a free 30-day demo of the TT platform. I'm not really sure. And X-Trader you can't get anymore. X-Trader is retired. It's now just called the TT platform, which is
I
a
see.
solution, which makes it really easy because you don't have to install any software. You literally just have to type into any browser trade.tt, and that takes you to that platform.
Well, I hope we can get some other people. Please type in questions, but I'll just ask a couple. Meanwhile, are the ETFs a viable way to trade crypto, or are they not? Are the ETNs also?
Yeah. They certainly are. I mean, like BITO. I've been in and out of it. Well, actually, just in it right now, and I actually hold some GBTC and I hold some ETHE as well. So, yeah, they're certainly viable. I don't have any issues with them. I'm sure, if you get down to the minutiae and look at the scratch, there's probably some financial reasons why it may not be the best investment. You got to be careful with some of those things. I know even like BITO, which I hold, is really based in Bitcoin futures. And the problem with any type of ETF or ETN that is priced in futures is the forward curve. The curve in the futures market forces you to actually pay up. Yeah, hopefully you've had to talk about this in some point in time, but yeah, the problem with the futures curve is, you pay up every time. So essentially you're losing money every time they roll futures. So when they're going from the June contract to the March contract, or the June contract to the Sep contract, June was trading 23,000, now you got to buy the Sep contract is trading 24,000. Well, you just lost $1,000. So that's the problem.
You're paying the roll.
You're paying the roll, and that can get pricey at times. So
can you explain, like, even the very basics? Like, we know that Bitcoin is the best known, and then there's Ethereum. Can you explain what the difference is, or what Bitcoin and Ethereum are?
Yeah. The way I look at it is, well, Bitcoin. A lot of people look at Bitcoin as the currency. That's kind of cryptocurrency. It's been around forever. It's the original one. That is what Satoshi wrote about in the original paper, and that's what it is. It's there to replace currencies. Ethereum is more of a place to build. That's where a lot of the applications are built. dApps are built. dApp is a decentralized application that's built onto a blockchain. And Ethereum, some people say that Ethereum should actually replace currency because of the fact that it also has a lot of metrics that kind of built into it. There are some very divisive differences in it. One is that Ethereum made a change several months ago to make it what's called proof of stake. Proof of stake just kind of means that you own some and you put it back into the exchange, and you put it back into the blockchain for security reasons. Because when you stake your crypto back to the blockchain that it comes from, it strengthens the actual blockchain because there's less out there. And when there's less out there, no one can come up with what's called like a 51% attack. I'm not getting into that. It's very detailed, very weird. But it's one of the reasons they like to have proof of stake, though, because people, and again, it's the same thing. You know, why am I just sitting on my Ethereum? I'm not getting paid any interest on it. When I stake it, you get paid an interest for it. You actually get some money back because now as miners are mining more blocks, they're actually going to pay you some of their proceeds to actually stake that back onto the blockchain. I know this is pretty technical stuff, but it's hard to explain it. Bitcoin, on the other hand, is based off of proof of work, and proof of work just kind of shows that you've kind of worked on the blockchain and you've done some effort to actually evolve it. And there was the SEC kind of raised some flags about that whole change recently. And I don't know if you heard Gary Gensler made a comment very point blank where he actually thinks everything in the crypto space outside of Bitcoin is a security, which makes it very prickly, of course, because with securities, you have some very different regulations that you have to deal with. And technically, you should only be able to obtain a security through a registered broker dealer, and that causes a lot of other nuance that makes it a little sticky. So that's other ways
that perpetual battle between the SEC and the CFTC for jurisdiction.
Yeah. Of course it is, because they all see it as a big growth thing, and it's also job security. You know, if cryptocurrencies, if crypto is going to take over the world, then of course they want to be the ones who regulate it. And the CFTC looks at everything as a commodity, which is the same as basically a future, which kind of makes sense because currency is really considered a commodity. US dollar is considered a commodity. Deutschmarks, or not Deutschmarks are gone, but euro, the yen, they're all considered commodities. So if Bitcoin is going to be a currency, they see it as a commodity as well. The SEC, of course, wants to say everything is a security because that is what they regulate. That is what they actually get paid to do, is to watch over things like that. So that's what they do.
I see Asen Salim asks, do you see that one? Any exciting?
Yeah, I'll tell you about some of the interesting cool stuff that's going on in Web3 DeFi right now. Some of the most interesting stuff that I've been working on a little bit and is going to keep fostering a little bit. Well, there's two things. There's tokenization, and I'll tie it into real world assets a little bit. Tokenization is exciting because, again, it's kind of a way you get around securities a little bit. But tokenization is opening up investments to the retail level to a great extent. It should continue to do so. And if you look at like a simple case of it, you look at tokenization of real estate, and you look at let's say someone who lives in the UK, and they've got an extra 100 pounds kicking around. They want to invest someplace, and they think the Manhattan real estate market is going just bonkers crazy. They want to get involved in that. What tokenization is allowing people to do is, let's say that building is worth $10 million. What tokenization is allowing people to do is it'll allow the owner of that real estate that's worth $10 million to tokenize it. And now they can sell tokens for like $100 a token, or whatever it is, which would be, 1/100th of 1% or something like that ownership of the actual building. But this bloke in the UK can now, with his $100 or 100 pounds, whatever, buy into the Manhattan real estate market because he read an article someplace that the Manhattan real estate market is supposed to double in the next 6 years. Okay, great. I want a piece of that. So that's one way to do it. That's one thing that tokenization is allowing people to do, where they can actually broaden out the expanse of potential investors for their product. And real world assets is another big thing in crypto right now, because it kind of goes to tokenization, because what they're doing is they're taking real world assets, and by real world assets, it could be real estate, it could be accounts receivable for a company, it could be property someplace, it could be a car, it could be the branding rights for a professional athlete. What they'll do is they'll issue tokens based off of all this stuff, and allow you to tokenize it essentially. So anyone can actually get a hold of it. So anyone can really get a hold of assets that are any place in the world based off a small little token they hold now. And they own partial ownership based off of just their token. The token is fully redeemable, fully tradable. They can get in and out of it very easily and liquid. Once the market mature a little bit, it'll have them get in and out without too much issue. But it's allowing small investors to do it, but it's also allowing things like companies to actually use their idle assets a little bit more. You look at you look. I'll go back to the real estate. You look at banks who have all these problems with foreclosed homes and things like that, where they have all these foreclosed homes laying around. They don't know what to do with them. They can't sell them. But if they can now sell, now they don't have to sell that. They just foreclose on a home for $400,000, and they're not going to be able to recover that $400,000. So no one to pay $400,000 for it. But they might be able to find, 1,000 people who are willing to pay $400 for, 10% of it, or whatever percent that would be. So it's a way to really break down an asset and make it much more accessible. And one place the real world assets and tokenization has gotten really, really popular and successful is in like South America and in Africa, where loans are much more difficult to come by, hard currency is much more difficult to come by. So some of the products are seen as people have taxi car services. They might have 10 cars in their service, and they will actually be able to get a loan based off of that because they'll tokenize those. And there are investors who will go in and take to the side of that. So you might have a guy who has a taxi service with 10 bikes in Sudan, and they can actually tokenize their business, and investors will come and take the other side of that for 17%, whatever they get paid, and they'll earn what this guy is basically selling. He's selling a bond off of his taxi service. He can generate that himself. It's real easy. It's real quick. It's real simple. And it sounds crazy, but you have investors here in the United States or in the UK who will buy into a taxi service in the UK that's in the Sudan they'll put $1,000 down because, hey, why not? They can do that. So it's broadening out the world for investment to a huge extent. And it's stuff like that makes the SEC very nervous, because obviously it's undercutting them to a great extent. So it's going to make for some interesting legislative battles in the next few years.
Is this NFTs? Same thing? Or?
Yeah, it's NFTs. Yeah, non-fungible tokens. And
is it clear in the US that these are not treated as shares of real estate or whatever, or is that up in the air?
Yeah, that's kind of up in the air. That's kind of the opaque area where how do you really list this? What does this really count as? So that's one of the strange areas of it where people aren't really necessarily sure how to account for it. I've been going back and forth to my accountant for about 2 months trying to get my taxes done this year, because I have some strange investments going on. So it makes for some interesting areas. And go ahead.
No, I was just going to say, Aston also asked about Web3. What do you think of Web3?
Yeah, and that kind of is Web3. A lot of people say Web3. What is Web3? Web3, a lot of people say, well, that's metaverse. And metaverse, I think, has some potential. It's still weird. It's still clunky. We had an event my company did for metaverse back in December, and it's interesting. It's weird, but it's got a lot of. It needs to grow. It seems odd that you're going to replace physical structured malls with online malls where you create an icon and you kind of walk around in that mall and do all your shopping. There's a space for it. I think it's going to get there. I think what's really gone really big in Web3 has been gaming, and a lot of the gaming has gone exceptionally well. And that is where they're proving a lot of things, a lot of technology are coming out of the gaming space. So a lot of the games you see that are sitting around playing whatever on Twitch, whatever type of games they're playing, a lot of this has morphed onto the blockchain. And the reason they're putting it on the blockchain is because this allows them to do so much more with it. Because now you can buy and sell assets for the game. Let's say it's some sort of car racing game. You can buy different velours onto your car. You can buy different tires. You can do a lot of things that gives you a lot more flexibility that you can't do in a standalone game. And what you can also do is a lot of the stuff is tokenized. So they have tokens for it. And those tokens you can then go and put into something like a Venus and actually get an interest rate on that and lend them out. Or you can actually go and buy them on different platforms like Venus, or buy it from the actual gamer and things like that. and use those to buy things in the games and get around and do things. The gaming's been really probably the most successful part of Web3 at this point, and it's growing fast. It's growing very, very fast, and it's been an interesting thing to watch because a lot of the things they've done as well too is where you get paid to game. So you're sitting there and you're playing your games, but while you're playing your game, they're actually paying you in tokens to do that. And why are they doing that? They're doing that because you're kind of mining that cryptocurrency that the game is kind of written on, the blockchain is written on. It's kind of confusing and convoluted, but there's definitely a space for that, and it's growing, and it's getting really hot.
So isn't Facebook, is it Facebook that's calling itself Metaverse, or?
Well, yeah, they call themselves Meta now. They do. Although interestingly, they pulled back 2 days ago, I think it was. They announced it via Instagram that they're going to pull back on Instagram because they were going to go into a hardcore NFT offering where people could build NFTs on Metaverse, not Facebook, Instagram. And they stepped away from that. And I didn't really read the whole announcement why they stepped away. But it's a relatively crowded space.
But are they, I mean, if they name the company Metaverse or whatever, aren't they making assumedly a huge bet on it?
Well, yeah, they're not stepping away from the Metaverse. What they stepped away from was just one of their projects. One of the projects was allowing people to build and mint NFTs on Instagram and using the NFTs. And you got to differentiate Metaverse from NFTs. The NFTs are kind of a subset of the Metaverse. The Metaverse is kind of more of the broader, grander space where, I mean, a lot of companies are buying space in there. A lot of, Macy's buys space there, and like Target buys space there. It's almost like they're buying websites that are held on the blockchain. And the reason they're doing that is because, again, a lot of these retailers probably want to get into the token space as well too, which kind of makes sense because you look at the a lot of the loyalty programs you have at grocery stores and things like that. You have to have your card or your phone or whatever it is.
Yeah,
they can replicate that with NFTs much more easily and much more smoothly. And then it gets down to it's a scan of your phone, it's a scan of a QR code in your phone. You're kind of locked in and done, as opposed to some of the processes they have right now. And way that I see that kind of evolving is, eventually, okay, now I've just built up a cache of Target tokens, and I've got a cache of Walmart tokens. I've got a cache of tokens for Sam's Club. There's going to be secondary markets for those. And that's kind of one of the advantages it's going to build out to that you don't really get. And that'll probably be a metaverse type of phenomenon to a great extent where, okay, well, I've been doing all my shopping at Target in their metaverse store instead of their online store or at Sam's Club or whatever. You're going to earn these tokens. And now I've got all these extra tokens. What do I do with the tokens? Well, you may or may not be able to take them with you. Let's say you want to go shop in some other place, you may not be able to, but there might be a secondary market for that. So it's gonna allow for some interesting evolutions to go along.
Okay, I'm going to keep asking some questions in the absence of anyone else, but please feel free to either just speak up or post a question on the chat. It would be good to get some more people involved. Does the
I could talk about another area too if you want to. So.
Pardon me?
I do have one other subject here. That's
please do.
That's the central bank digital currencies. I think if anyone follows crypto at all, you don't even have to follow crypto. If you just follow Wall Street at all in the last week, there's been 3 big bank collapses that have garnered a lot of headlines. Excuse me. 2 of those banks, Signature Bank and what was the other one? 2 of the banks that failed last week, it was Signature Bank, I forget the name of the other one already, but they were big off-on ramps for cryptocurrencies. What I mean by off-on ramps is to get into cryptocurrencies, you have to exchange your dollars for crypto. So they have these on-off ramps that essentially allow you to do that. And not many banks are willing to do that because they're worried about the legislation behind cryptocurrencies. So the 2 leading banks, Silvergate, thank you. The 2 leading banks that were kind of doing that here in the States basically went under last week. And one of them some people think probably shouldn't have gone under, but I think it was more of a squeeze from the federal government they're worried about the competition for that. I have a theory. You know, I think a lot of people have heard of central bank digital currencies. A lot of governments are working on central bank digital currencies, and I think they're worried about the competition that these on-off ramps kind of have, because stable coins, which is what places like Signature and Silvergate kind of produced and pushed out. Silicon Valley Bank is a little bit different story. I'll talk about that too. But the stable coins would compete with the central bank digital currency, which is basically the US dollar put in a digital format. So there's some question whether the US government wants to see stable coins kind of survive and thrive, because they're problematic, because it makes their own central bank digital currency less appealing to some people. So that's been a big story. And yeah, Silicon Valley Bank was another one that went down. We did have a bit of exposure to crypto because they did support or have some crypto companies in California who kind of banked them, but they weren't really doing the on-off ramps kind of like the other two were, Silvergate and yeah, Credit Suisse is on the issue as well. I don't want to get into that one. Yeah, but I'm sorry, I just want to get those stories out there, because those are probably stories that people have heard of, and wanted to share some insight on that a little bit.
No, that's absolutely in the news, and everybody's very interested in it. And there are a lot of startups. You're with one, and there's been a lot of others. There's a million out, all sorts of them connected to crypto. Are most of them junk, or is it a solid area? If you're a software developer and interested in being, and we have I think a lot of software developers or software engineers in our group, should you consider looking for a job in this area, or inventing something of your own, or is it just too uncertain?
Yeah, you know, it's funny when you put it that way. You know, whether you should work for someone else or invent your own, that seems the way a lot of work. So you see a lot of engineers in the crypto space who sign on for a few months and then they're gone, because a lot of times they are working their own product. There's two things. Demand for engineers in the space is massive. It's huge. So getting a job isn't terribly difficult, I don't think, if you're an engineer to get into crypto. But yeah, a lot of the engineers do kind of, I know the company I'm at right now and the company I was at previously lost some engineers because they came up with ideas and went and built their own thing too. So it's kind of nice thing there. One of the interesting things about crypto too is a lot of the companies, one of the advantages is the majority of them allow for work from home, like full time. Like I haven't been in an office in years. which makes it kind of appealing, but also they encourage people to work on their own projects as well too. So that's an encouraging thing. So, you know, the price you pay for that is, yeah, now I'm going to write my own code, I'm going to write my own structure. You know, as long as you don't compete with what you were working for, a lot of shops, you know, they kind of expect that to a certain extent. So wandering off after a year or so isn't the end of the world. And it's amazing how much people job hop in the crypto space. It's mind-boggling. It's mind-boggling to see people go through 3, 4, 5 companies over the course of 4 or 5 years. It's just not uncommon at all in the crypto space. And why that happens, a lot of reasons, but it's weird. It's not like the TradFi space where, you know, trying to move from one shop to another was kind of very, very taboo. You just didn't do it. But in the crypto space, there's a little bit more free moving bodies, I think.
If you wanted to consider doing that, either developing something on your own or working for one of these companies, what skill set would you want to bone up on or develop?
I mean, language-wise, a lot of people doing Rust stuff right now, but C++ never goes away. And what is
Python?
Yeah, Python is certainly right there. A lot of people do some Python stuff, which is surprising. It just keeps kind of plugging along. So Python can certainly get you a job in anywhere, in crypto or in TradFi or any place you want to go. And so yeah, that was a good call. Python is definitely there.
Rick Hoffman has a question in the chat.
Would central bank digital currency make Bitcoin obsolete. You know, I've had a debate with a lot of people in the space, and I don't know. You know, that's part of the claim is does it, but you know, there's so many hardcore people in the Bitcoin space that just don't want anything to do with the federal government. They don't want a federal government controlled centralized digital currency. There's a lot of fear about a centralized digital currency because there's a lot of scary things that can happen that they say is already coded into some of them. You know, because you put it into a central bank digital currency, and there's been talk, and I think even out of Washington, some legislators said this too. It's like, well, okay, now we're gonna have a centralized digital currency, and one, they can kind of thrust it upon us because they can say, all right, well, let's say you're going to get unemployment benefits. We're only going to pay out in centralized digital currency. Let's say that you're going to get payments on your treasuries or something, but they're only going to pay it back in centralized digital currency. Let's say you're going to pay a parking ticket. They'll only accept centralized digital currencies. You got to pay with that. Let's say they go to retailers and say, hey, retailers, you know, instead of paying a 1% sales tax, if you accept payment only in central bank digital currency, you can charge only 75 basis points instead of full 1%. So you're going to save 25 basis points if you accept transactions central bank digital currency, because the government wants you to accept central bank digital currency because they can get the tax payment out immediately. It's part of the transaction. You know, there's no waiting for it. It automatically goes to the treasury. It automatically goes in there. So there's a lot of reasons governments want to push something like that, a digitalized world, because they have faster access to our money as well. But then there's other fears that, okay, well, let's look back at when they were feeding the economy a little bit. Or let's go back to the unemployment case. You're getting an unemployment check, and now it's going to be paid in central bank digital currency. Well, they're going to tell you what you can actually spend that money on. You know, that's debatable. Okay, now central bank digital currency, your central bank digital currency will be coded so you can't buy alcohol with it, or you can't buy low quality food, or whatever it is. Can they do that? Would they do that? You don't know. It's possible. Technically, right now, I think you can't buy, you know, vices like that with government subsidies. When people do, of course, they find ways around it. You know, but there's other ways around it too that people worry about. Is your central bank digital currency can expire. You know, there was a talk about that as well too, that, you know, what about when they put the incentive checks out to us during COVID? What if the government had actually said, by the way, okay, yeah, you're going to get your check for $800, whatever it was, but you have to spend it right now. If you don't spend it if you don't spend it in the 6 months, we're just going to take it away. It's going to expire. It sounds draconian, but they, in theory, not in theory, they already say they've practiced that in China already, because China has a central bank digital currency that's been floating around in some of the regions there. And those are some of the models they're testing out. So there's definitely concern there. So whether it replaces Bitcoin, you know what, it's probably not. Bitcoin will continue on. Use case might drop a little bit, but you know, what's the use case right now, to be honest with you too? So I don't know if it really drops to the way.
If the government tried to shut down these currencies completely, which I could certainly see it trying to do, would it generate an underground economy that would continue to use it?
Yeah, it'll continue to thrive. It'll be like prohibition of alcohol. It'll continue to stick around. You can't really. There's no way to ban it. Well, you can ban it, but there's no way to actually take it out of everyone's hands. You just can't. You know, it's the internet, so you know it's beyond the reach of the federal government to an extent. Can they do things and say it's illegal to actually have some? Yeah, but it's going to be hard for them to pass a law that says that. You know, how do they actually say you can't physically have that? And they've tried that in some countries. I think India tried that. I think a few others have tried that as well too, and literally ban or make it illegal to have. But good luck. You know, technically, cryptocurrencies are illegal in China, but you know they thrive. It's still the biggest trading market of cryptocurrencies in the world because they get around through VPNs and everything else from the sun. So it'll be hard to ever banish something like that. Yeah, they did ban gold for a while too. So you know, good luck with that. Is it easy to automate crypto trading? You know, I got to harken back to my future space, and I worked on algo trading in futures for a long time. And yeah, we built some great stuff for automating crypto trading. So yeah, it can certainly be done. And again, if you go to a platform like TT from Trading Technologies, they have ADL, drag and drop, DIY algo development tool. It's pretty cool. It's pretty easy to get around and muck around with. So yeah, it's certainly a viable market to automate the trading, to automate your crypto trading. There are a lot of bots out. You can buy bots right now and things like that. I wouldn't trust anything like that, but it's definitely a market that can be programmed for automated trading without any question about it.
Do you want to, I know you're working with or for Venus. Did you want to add any more information about that?
No, I mean, you're all welcome to check out the website. It's venus.io. You'll see it's, you know, universal money markets. It's easy. I can put a link to it in the chat actually.
Venus.io.
Yeah.
Yeah,
You
people
can
should
click on launch the app. You'll see what's the rates and things like that, the way it kind of works. But you can do things there. You can swap crypto out there. You can take loans. You can supply currency. You can supply cryptocurrency into it. It's kind of cool. It's. I mean, the way I look at it, when they recruited me, I was kind of looking at it. They don't like to say it's banking, but it kind of is. It's the new wave of banking, and it's DeFi, so it's not centralized. So you don't have to worry about the FTX type of fiascos that are out there too much. So.
Is it like a Uniswap with dollars, says Asen?
Like funny, it's funny that you mentioned Uniswap. Uniswap actually just went live on BNB chain yesterday, which is great, good for them. But so yeah, if Uniswap, you're familiar with that for trading your tokens, for swapping your tokens in the DeFi space, you can do that on BNB chain that just started yesterday. And the advantage of BNB chain is the fact that it's faster and lower fees than Ethereum and other chains. The drawback on it is that it's not really as decentralized as Ethereum, as most of the chains either. That's why it makes it faster. That's why other chains like Solana is also very, very fast, but it's not really DeFi because it's kind of centralized in many ways. But so the swap part of it, no, I wouldn't say it's like that. We're more like an AAVE, if you're familiar with AAVE.com, or a Compound Labs. Those are both. AAVE is the world's leading crypto borrow lend protocol. And they've got TVL, which is total volume locked or value locked. That's all the loans and stuff they have in there. I think theirs is around $6.5 billion right now. Venus, we've got like $1.4 billion locked in the protocol right now. So we've got about $1.4 billion of active loans out there right now. And
There's
it's kind of
another question or two there.
Oh yeah, and tell us more about staking. Also, what is yield farming? Have you heard those? But I'm not sure. Yeah, staking, like I said, is you can stake on our platform, and I'll give you an example. Like you could stake, you can stake our governance token, which is called XVS, which is our own token. But what staking is, it's you're putting your token back. It's almost like you're giving your token back to the blockchain. So you're gonna give it back to the blockchain, because if you give it back to the blockchain, it makes the blockchain safer and more secure. Because let's say there's 1,000 tokens out there. If there's 1,000 tokens out there and one person owns 501 of those tokens, he now has more voting power than everyone else out there. He is now the most powerful person out there. He can basically take over that blockchain to a great extent. So you don't really want anyone to have too much power within the blockchain. So when you stake it, you're kind of giving up your rights to it a certain extent. You're not giving up your rights to it, but you're giving up control to it a little extent. And the miners want to pay you for that, because in theory, it makes the blockchain safer. So that's why when you stake, you'll generally get a higher interest rate than if you just simply supply. If you simply supply, you're putting into a loan like an AAVE or a Venus to allow someone else to borrow it. If you stake it, on the other hand, no one's going to borrow it. Instead, what's really going on is they're going to put it onto the chain and they're going to pay you a better interest rate for it. So it's a little bit different. What was the other part of that? Yield farming. Yeah, yield farming. People use our protocol Venus for yield farming a great deal. And why they'll do that is what they'll do is they'll see that they can go and, let's say, I'll just pull something out random right now. They can go and borrow Ethereum essentially for 1.24%, so 124 basis points. They'll borrow it from us because they're aware of some other protocol out there that if they supply another protocol, they might pull 2.25%. So if they borrow from us at 1.25, they can supply it in another protocol for 2.25. They're going to make 1% in that spread. And that's kind of what yield farming is. They'll basically go to yields. They'll borrow the low yield and they'll lease it out, or they'll lend it out in a protocol that has a higher yield. It's a very popular strategy, very, very popular. That is a huge thrust in DeFi is yield farming. That is a huge part of the volume that goes through our protocol is exactly that, it's yield farmers.
Should we regard all of these as prototypes and experiments, or is it actually feasible if somebody wants to try? And I don't think we should call people retail, but you know, people who are interested in the area, should they actually try these things, or are they all extremely dangerous?
No, it's 100% doable. It's 100% live and real. Like our protocol, Venus, has been around for 2 years, and it's been real. People do this. They do it. And you know, if you want to go something more closer to home, like an AAVE or something like that, which is the biggest one out there, you go to the protocol. There's educational material out there that'll explain how it really works. And that's one of the things I'm working on for Venus, is actually trying to build up more education material, because we don't really understand it that well. But yeah, no, it's real stuff. This isn't like make-believe fantasy. Hey, this is alpha. This isn't like beta software. This is real production level software that is used by some of the biggest cryptocurrency players in the world. So,
you said AME. Could you spell that, or what is that?
AAVE, AAVE.com.
AAVE.
Yeah, that's our biggest competition. That is literally the biggest borrow lend protocol. And yeah, right now on their website it says they have $6.6 billion of liquidity is locked in AAVE across the 5 networks, and they're on multiple blockchains. Like right now, we're only on one blockchain. We're on BNB chain, although we're going to go multi-chain. We're going to add Ethereum and some others next quarter. But with AAVE, you can actually do transactions and have them on Ethereum, or have them on Avalanche, or Optimism, or Arbitrum, or Polygon. So yeah, there's different ones out there.
There's another question there.
Are there Venus tokens or transactions paid with thought? We don't convert currencies at our place at all. So we don't use dollars at all. What people do is you connect your wallet. And your wallet could be, most of the traffic comes through on I'm sorry, I just got a message this morning. But you use your crypto wallet, and your crypto wallet really holds your cryptocurrency. You log into the protocol or the app with your wallet. That's the kind of the way Web3 works. Web3 works, and we're a Web3 protocol. Web3 works by, you don't have like a username password. You log in with your wallet, or with a wallet. So once you log in with a wallet, the protocol recognizes you have all these different cryptocurrencies, and it'll tell you that, hey, this is what you can do with them. You can go deposit these, you can lend these out, you can borrow these, per this interest rate, and go from there. So you don't pay with dollars, you pay with your actual, or you invest with your currency. And with the Venus tokens, which is our governance tokens, and a governance token in the DeFi space it means like we're a DAO, a decentralized autonomous organization. With the governance tokens, what allows you to do is vote. That allows you, because like I work for the protocol, but we don't really make the decisions. We will kind of do what the community tells us to do. The communities are the token holders, the governance token holders, and they will say, hey, you guys should add this blockchain, or you guys should do this or this or that. We kind of listen to what they say, because the people with the governance tokens, which in our case, Venus protocol, our governance token is called XVS. They vote and say you should do that, and a lot of times it'll be, again, connect to this blockchain, or it'll be to go do some marketing over here, or do whatever, or say that we should add this certain token into the protocol. So yeah, you don't really pay with US dollars with most DeFi stuff. You pay with governance tokens or other tokens. If I stake, borrow against BNB, pay the small transaction fee with BNB. Yes, you would pay the small. Yeah, that's another point. Yeah, and No, I know where you're going with that. Really, all the transactions on Venus are paid for in BNB because that is our host chain. So that would change if you're going to transact on Ethereum, or if you're going to change on Polygon. On Polygon, you pay with Matic. On Ethereum, you pay with ETH. But right now, since the only blockchain we transact on, if you actually go and borrow or lend, you will pay a small transaction fee. But that transaction fee is really just the gas fee. So, like if you're going to go stake your XVS token or stake something else, you might pay 25 cents, 30 cents, 40 cents, less than $1 to actually stake a handful of them. So it's not a big transaction fee. The transaction fees are significantly lower than they are on Ethereum. Ethereum has extremely high transaction fees. So that's one of the reasons we've got a bit of an edge.
Well,
Does that answer
that's
your question.
That's great. Asen or Bhaskar, do you want to take the mic or tell us your experiences with it or your view of it? Does anyone have an opinion that they'd like to share? If not, I think it was and feel free to stick it in there. I think it was a tremendous. I'm starting to understand some of this stuff, and I think I'm sure some of our other members are too. And I think we'll be able to, maybe a year from now, we'll be able to ask a lot more intelligent questions. But
Sure.
It's great to have an idea of what's going on, and also look at it from the point of view of something we might want to work for, or maybe start something ourselves. Did you have anything you want to add? Or
no, if anyone wants to reach out to me, I don't know. I think you might have put some contact information in the invite, but yeah, you can find me on LinkedIn, Patrick Rooney at Venus Labs, or you can find me on Twitter at Patrick Rooney is my Twitter handle. Happy to answer any questions, help you out, anything I can do. You can email me, I'm patrickj@gmail.com, whatever you want to do.
Fantastic. Very best of luck with Venus Labs.
Great. Thanks for having me on, Don, and thanks for taking the time to listen, and hopefully you got something out. If you have any questions, follow up. Happy to help you out.